You basically have a three-pronged growth approach. You have utilities, pipelines, and commercial renewables going forward. Walk us through what we can expect over the next year.
The industry continues to go through great transformation, Alex, and we're really excited about the investment opportunities that we have across our businesses. In the utilities, we're focused on investment in our delivery system, the grid, to deliver customer expectations and enable more renewables. We're also investing in cleaner forms of generation, both solar, wind, and natural gas. And also, you mentioned natural gas infrastructure. We continue to make great progress with Atlantic Coast Pipeline and see that as an important investment for our customers and our investors.
How much do you feel that infrastructure segment is going to contribute to your earnings?
So the utilities are the largest part of our business, both gas and electric. Alex, they'll continue to be about 90% of what we contribute. But really, Duke overall is an infrastructure business, because if I add in my commercial renewables, I also regard that as infrastructure. So we are a very diversified, across the U.S. electric and gas infrastructure business, really transforming to meet the needs of, the U.S. and the states that we operate in.
As we kind of move forward with that, what does that do to your unit labor costs and your margins as you continue to expand in that area?
It's a great opportunity, a great time to invest, but I do think the point that you're making around labor, as the unemployment rate continues to decline, we do see competition for labor, particularly in our field crews, in areas that support the infrastructure growth. And we offer a great opportunity at Duke Energy for a career and really work on recruiting diverse talent across our jurisdictions in a way that makes it attractive, we believe, for a long-term career in the industry.
So if those unit labor costs are rising, can you give me a sense of how quickly?
So the labor costs are rising at a reasonable pace at this point across our business, but I would say in certain segments of our business, we're seeing a stronger demand for labor. So what I would suggest there is in areas where we're building the delivery infrastructure, so the grid infrastructure, that is an area where modernization is occurring across the U.S., so a little bit more demand for those resources. Vegetation management coming out of hurricane season, also demand for those resources.
Which leads me also then to another area of expansion, which is M&A, of course. Duke has been mentioned as a possible buyer for Santee Cooper. It's a state-owned South Carolina utility. Are you going to make a bid?
M&A is an opportunistic an opportunity that presents itself from time to time, Alex. But what we are focused on at Duke is our organic investment profile and the growth that we have in our business. What we talked about just a moment ago, infrastructure, electric and gas, is really where our focus is. We do not have M&A as part of our plan over the next 5 years, but we'll look at opportunities that arise.
And then, of course, you'll be helped by tax reform. Walk me through how much of the tax reform is going to go into rate decreases for your customers and how much stays with you.
I think tax reform represents a terrific opportunity to lower prices to customers while at the same time lessening the impact of price from modernization investments. So over time, customers will see the full benefit of tax reform, and we believe there's an opportunity to provide some balance where those reductions in price also offset what might be increases from the modernization investment that's going on. So we think there's an opportunity here to continue to invest at low prices.
Well, what's the arbitrage for that? Meaning, how long do you have until you have to pass on those rate decreases? Meaning, how long does it stay good for you for?
I would think about the tax decrease as going directly to customers really over a reasonable period of time, Alex. So I wouldn't think about it as arbitrage. What I would suggest is as we continue to invest in our infrastructure and providing services to customers, tax reform gives us an opportunity to lessen the impact on customers over time. So they'll see the benefit of tax reform really very quickly and over a period of time.
So then just two more points. The first one, staying on rate increases, actually, in terms of the Carolinas. You've been trying to get a rate increase there to help pay for your ash coal cleanup. Where do you stand on that?
We have a couple of rate cases underway. One for Duke Energy Progress. We would expect an order from the Commission any day. And the second case is scheduled to go to hearing within a week or so, Alex. So both of those should be resolved in early 2018.
And Lynn, just to wrap it up with the last question here, utilities have been a big beneficiary of lower rate environment. As the Fed continues to hike, as we see a potential 3 handle on the 10-year yield, does that make a utility like yours less interesting to investors?
I believe there's always a place for an investment that delivers 8 to 10% total shareholder return. And we accomplish that with a strong dividend and also with growth in the range of 4 to 6%. So I believe in any market there's an opportunity and a place for utility investment, and Duke is a low-risk, cash flow producing entity that produces 8 to 10%. So we're looking forward to ways we can continue to grow the company.